hello, and welcome to another episode of Red on the Screen. I will be your host today, Dr. Dieter Haufenheimer, and we will be talking all things crypto. We're going to be talking about a lot of stuff. I got one for you. Just let me do a little bit of venting, okay? Give me this opportunity. For those of you that are joining in the stream early, we've got time. We've got time until Jerome comes. We've got 14 minutes. So, check this out. Before this, I was out riding, everyone. And you know what I'm talking about, like, bike riding. Let me do this. Let me mute it. And what do you see right there? Oh, what is that right there on the screen, everyone? What is that? That's a baby. Do you see that? That is a baby. So here I am just riding down the road, just doing my thing. And what do I see, lady? Oh, you can see it clear as day right here. That is a baby on her lap up against the driver window. So here I am hanging out on the old road bike, and what happens? There's a baby right there. See that head right there? That's a little head. And you see that? That's a big head right here. Maybe if you're looking at it on a phone, it's small, but I got a big screen in front of me. It's pretty big, actually. Yep, that's a baby right there. So just putting it out there. That's what I dealt with today. Range Rover drivers, they simply just do not care. Baby head, person's head, end of story. Oh, there it is. A little baby, no seatbelt, nothing. Frustrating. Okay, either way, back to crypto at 2 p.m. Eastern Time. Jerome Powell will be doing what, everyone? He will be pausing. Why do we know this? Because basically it's in the cards right now. We're waiting for them to go live. The actual conference is at 2:30. But instead, no, I'm just kidding. We're going to cover it. 2 p.m. though, we get the announcement. I'll be able to share that with you when it happens. Jerome Powell's last meeting, hopefully, as Senator Thom Tillis decides to get out the way and let work happen. Maybe she did have to feed her baby. I don't know. My thinking was, I was like, okay, maybe she was riding her car to the mailbox, right? Because, there was a big, their driveway was at least, an eighth of a mile long. It was huge. And, I'm thinking, okay, maybe, she's got the baby in her lap. She's going to take the baby, drive the car like a golf cart on her driveway to get her mail at the end of the driveway. Except when I turned around, the car was driving the opposite direction on the road. I was like, dang. Maximus Decimus hanging out with us. Says, what's up, big dog? Just stopping in to say hello, then going back to work. Well, hello to you, too. Justin at Trucks is training to drive. Really, nothing wrong with that. Yeah, I was just shocked. I was like, what the hell? And I had my camera rolling just for some B-roll stupid footage, because I got a second channel. For those of you who don't know, I'm doing a 24-hour ultra cycling race, and I got to get ready for it. So I did some riding today, and that's what I saw while riding. And Colby Manning, 2-gear Powell, that's right, he red lines it in first, and man, if he's ready to pop into second, he probably pushes the clutch back in and stays in first and red lines it a bit more. Justin Trucks says, babies get driving permits now in Democratic states. When I lived in South Dakota, that's not a Democratic state, but when I lived in South Dakota, you get your driver's license at age 14, and we had a high rate of deaths. A lot of times because we have really bad weather in South Dakota, and with such young drivers on these country roads, they wouldn't be ready, and yeah, problems. Glenn's hanging out with us. He says, evening all. Michael Keenan says, if rates go up, is that good or bad for crypto? That is bad for crypto. Bad. Rates going up is bad for crypto. Crypto is super risky, right? This is all super risky stuff. We really don't have regs. We've got hack scams and schemes all the time. We're not really sure where we sit with yield. Custody is a mess. ICOs are a slap in the face. Stuff like that, right? So this is a risky pool. For risky pools, you want cheaper money. lower rates. And you're not going to get lower rates anytime soon if this inflation number stays high. Important thing to pay attention to is what our expectations for the entire year. Because we were expecting 2 cuts for the year, and now all of a sudden, what? Yeah, we're expecting 0 cuts for the year. Withouters says, let's hope we get a surprise cut. Dude, no way. No way are we going to get it. There's no way you're going to get a surprise cut. Oil prices over $106. Let's refresh it to get the latest. Oil over $107 right now. So those oil dividends are going to be paying pretty good here over the next several quarters. Look at energy up on the screen. That entire sector is in the green. Entire sector. Look at that. Hot Donna. Nice. Can we talk Robinhood while we got time if you can? I lost a ton in the past few days. Yeah, because there's not that much volume. There's not that much excitement. There's not that much oomph for crypto. And a lot of the stock market, check this out here, watch this. A lot of the stock market, you got to think about Robinhood and all that, okay? A lot of the stock market is looking at crypto and going, you know what? This is really, really risky stuff here. If they don't get regs, volume is going to go way down. Money is going to be brought way down. So your Robinhoods, your Geminis, all those players are getting pounded. Look at Robinhood, down 13% for the day. Coinbase makes money, and they're still down 6.8%. 4Chief31 says, Klaus, what's up? What's up to you? So yeah, you're definitely seeing crypto players getting pounded here. Why? Because their profits are going to get pounded. But it makes sense, right? If your volume is low, if your spot volume sucks, okay, who's not making a lot of money? The exchanges. I mean, look at Robinhood, 13%. Coinbase, 6.2 or 6.8%. Those are some nasty deep in the reds, and they happen to be crypto players. So the whole thing about this is what? Is where is the money flowing to right now? It is going to keep flowing into energy stuff for a while. Why is it going to be hot? Because the Strait of Hormuz is going to be hot. And why is the Strait of Hormuz going to be hot? Because we're not seeing compromise anytime soon. And it's going to take some while to unravel this mess. The economic ripples will be felt for a while from this. Trick's hanging out with us. Trick says, top of the evening to all. What's up to you, Trick, kind sir? Trick missed it, but I'll show it. Check it out. You see that right there? That is a baby on her lap. Right there. See that? That's a baby head, and that is a mom head. Uh-huh. Uh-huh. That's what I'm talking about right there. That is what I'm talking about. So for those of you that do not speak Spanish, that's what I saw today while riding a bike. Lady in a Range Rover, baby on her lap. Right there, passenger seat. Ms. Carmen Zavanovic says, back to buying physical silver. Yeah, let's do that. Let's take a look at silver. We haven't for a while. That's a good call. I like that. Gold right now, $45.58. Let's put silver in up here on the top so we can take our latest look. Silver, $71.99. So basically $72. 4Chief31 says thoughts on SpaceX IPO. I don't know. I don't know enough about their financials, and a lot of it is, what is the demand going to be? Is the demand going to be government contracts, or is the demand more going to come from the private equity side of things? For me, like, I'm interested in it, but I'm not going to put any money into it. I foresee it definitely being volatile, for sure. Dustin Thibodeau says, looks like a nice place to ride a motorcycle. Oh, dude, it's an awesome place. I love riding out here. I get lots and lots of miles. And Flying O says, no better place than to watch Powell's last stand than here with Captain Klaus. I appreciate that. Powell, expectation, it's coming out in 5 minutes. I'm going to read it to you. That's right, in 5 minutes, I'm going to freakishly click the refresh button to see what comes out. We know he's going to pause. We know he's going to pause. Just for poops and giggles, I'll put it out there for you. What are the latest odds from the FOMC from our good friends at the CME Group, 100% chance that he is going to pause. 100% in paused. Just watched your last post in 2x and now everything is slow-mo. Yeah, that's what happens when you slow down speeds there. You got to sometimes keep it high speed, right, baby? High speed. So the crypto markets aren't liking this. Why? Because we think regs are probably not going to happen. The reason we think regs are probably not going to happen is we're running out of time. The Democrats have ethics concerns. Banks still have their concerns. Tillis is ready to push the subcommittee forward. Markup, yeah, that's good. But is there enough support in the entire Senate? Hard to say. How do you feel about it? Do you feel like we're going to get regs? Let me know in the comments down below. No, let me know in the chat, not in the comments. I normally say the comments because it's video, but this is a live stream, so we do it a little bit differently here. So let me know what are your thoughts. You think we're going to get clarity? I want to see more yeses, nos. You let me know. Yeses or nos in the section, in the chat. Are we going to get clarity this year? XRP's price, $1.36. Volume, $2 billion. FOMC meeting. Oh, look at beautiful DC right there. I love it. FOMC meeting right around the bend. Jerome Powell's last. This is going to be freaking awesome. Super excited about this one. I want to hear what the questions are. Oh, we're getting some yes, no's. Oh, a bunch of no's. Ooh, got a yes coming in. So we got no. Do you guys want to, and gals want to do a poll? Let's do that. Let's add a poll, all right? Let's engage with the audience. Start a poll. Here is the question. Will we get Clarity Act this year? And here you go. Poll started. So we got yeses, no's up on the screen. Vote in the poll. I'm very curious on it. Most of you say no. Some of you say, hell no, girlfriend. But a lot of people are saying F to the no. No regs, banksters are among us. They got to pass because of GTA 6. Dude, we need GTA 6 to happen. No more delaying. I don't want delays in Clarity Act. I don't want delays in Grand Theft Auto 6. No more pauses. No more extensions. Let's get stuff done. Probably no regs if rates increase XRP near $1 soon. Yeah, if we get Clarity Act completely killed, you're going to see a pullback. There's still hope in the market right now that we can get it done, but the reality is I just don't think there's enough Democratic support. The Democrats probably are going to keep blocking this. And right now in the chat, we are 50-50 right now for the poll. Actually, 52% with no's winning. Ooh, interesting. Very close, though, right now. You know what else we're close to? Jerome Powell giving us what? A pause. 100% chance that we're going to pause. Why? Because inflation's rearing its ugly head. And by the way, this is global inflation. So for all of you, like that are, into this kind of stuff, you know that all of us are going to feel it in the butt on this one. Like, for real, we're going to get rear-ended on this because this is going to be global inflation. The whole supply chain is going to get roasted. Chameleon says the ABA is in too many pockets, the American Bankers Association. Totally agree. Totally agree. I'm hoping for it to be blocked so I can buy more. That's from Justin a Truck. Interesting. Yeah, how many of you want it to be blocked so you have time to accumulate? Or are there people out there that really said, hey, look, I've accumulated enough. Let's get some green up on the screen. Now what I'm going to keep doing is I'm going to keep hitting the old refresh button right here. I'm also going to get a drink. Got a hydration bottle here. And when this thing pops up, I'm going to read it to you. And you know what it's going to be. It's going to be a pause. Someone said they're waiting for the next Cyberpunk to come out. Oh, that's interesting. I honestly don't have a game that I'm waiting for to come out right now. I have not been gaming as much. I've taken a break from Tarkov 2. I've actually been putting a lot of effort into the channel. A lot of effort. A lot that you don't see yet. There's good stuff coming, everyone. And I haven't had much time to game. I've also been training quite a bit. F5 for the win. Oh, here we go. Jerome Powell's statement. I've got it. The committee decided to maintain the target range. Let's highlight that. They took a pause. And just in, I will put it up in the chat. Guess what? The Fed paused. Boom shakalaka right there. Like that? Hello, Jeff Zen. Coffee to welcome, chat. What's up? Oh, man, I wish I had some coffee right now. I ordered some Mick Cafe hazelnut K-Cups. Should be here today. Oh, my God, are those freaking things hard to find. But if you missed it, it's a pause. I told you. You can't lower rates right now. And if you raised rates right now, you would send shocks through the market about a recession coming. Amor Ortiz, Mary Ortiz, hopefully I'm saying that right. Amor Ortiz, gosh, I'm trouble reading it. Says, folks are delusional, no regs. Better off learning how to make money without regs. Michael Keenan says, is a pause good or bad for XRP? It's neither, because this was expected. Like, everyone pretty much had this priced in. The market's really not going to move from this. The market's going to move more about what he says, because what he says is going to relate to inflation. And he's also going to probably be asked a whole bunch of questions about this being his last meeting. Low Life Gaming says, we knew he would. Yes, we all did know that he would, but we've been talking about it for a while. You can't raise rates when inflation is going up. And inflation is going up right now because the entire global supply chain is having to pay a shit ton more for energy costs. That is why. Pause for the cause. Like America doesn't have control of the Hormuz. That's funny. Trick dropping mega support on the channel. Trick says steady as she goes. And I'm replying, I'll keep buying the good stuff. Trick, thank you very much, sir, for your kind support. Let me give that a like-a-roni. Everyone give Trick a big thank you as a standard. Anytime someone does a super chat, we always give them a big thank you for supporting the channel, keeping this place what? Sponsor free. Why? Because I'm not here to pimp you out. I'm here to give you the news. And the news is oil at $107. Inflation's going to tick up. Fed paused. We knew this was going to happen. We've talked about this for weeks and weeks and weeks, how the Strait of Hormuz in the energy situation was going to keep rates higher for longer. Now, granted, there's probably some hopium channels out there that are like, oh, emergency rate cut. No. That's hopium. We give you real news, good, bad, happy, or sad. Yes, golf clap to Trick. Seriously, everyone, a big thank you to Trick for supporting the channel. Just in a truck says, especially when Trump says he won't sign no more bills until the Save America Act is done. There's too much going on, so my prediction is July 4th, 2028, before the Olympics for clarity. I think it depends, too, how midterms go. Midterms are going to be very interesting. There is a gal running in my state who is running on the platform of no state income tax. That would be huge. So just putting it out there, some of these politicians have decent ideas. Maybe their other morals suck, but you know my point. Trick, getting the golf claps, well done. Oh, especially the golf clap with the green with the pin on it, well done, Jeff Zen. By the way, look at that. We're seeing, what, a 50-50 split right now, and if we're going to get clarity this year. RDNKMA says, they will put regs in the Clarity Act to screw Trump out of crypto. Ooh. The Democrats will go to pass it. Very interesting take. And give Yamaha a very big thank you as well. We do need clarity, as Brodek Gold Mining is saying. Saying, it's so clear, we need the clarity, yeah. That was very funny, yeah. I thought that was very good, yeah. And thank you very much for the support. Kindly appreciate it. So what are we noticing? Our optimism's a little bit down. Because earlier in the year, we were what? We were expecting maybe 75% chance of clarity passing. And now look, we're pretty much 50-50. 52-48. 52 yes, 48 no. Best to have low expectations in case it doesn't pass. I agree. Now, how low will some of these players go? I mean, some of them like Robinhood. Here, let's pull Robinhood up a little bit. All right, let's pull, because we're gonna talk about all things crypto. So, what about crypto-related stocks? Robinhood. Let's just zoom out. Look at that. That's a pretty hefty fall here over the last several days. Zoom out and you're like, oh, Jeebus. As Bitcoin goes, so does Robinhood stock. Why? Because volume was juicy in October when BTC, your biggest crypto on the block, was roaring. And that's something that I think a lot of XRP holders and a lot of altcoin holders have to look at, is we have to really expect and want Bitcoin to do good. Because when Bitcoin does good, it brings a lot of volume, a lot of excitement to the market, a lot of legitimacy in terms of like, you know, BTC-backed loans, BTC credit, and so forth, things that are different than traditional finance. And as BTC rises, so does the entire market. Chameleon, how's it going? Pancho Hernandez hanging out with us as well. Van Dozer here, 7 Sins. Says, but Klaus, if they're going to get rid of state income tax, they're going to tax something else. I agree. It's always going to come from somewhere. But the income tax rate is pretty high for some of us. And I got to be honest with you. If that means sliding it more to food, makes a little bit more sense for me. That, you know, you get what I'm saying, right? Kind of split that up a little bit. Let's see. It says, Trevor Williams says, yo, Klaus, Viking Rick and Crypto Trev in the house from the UK. Well, hello to fans across the pond. Trick's hanging out this from across the pond. We got a bunch of viewers, listeners from across the pond. Wildcat on 3 says, I'm ready to be disappointed. Disappointed? Well, we all knew the Fed was going to cut. I'm ready to be disappointed in what? Clarity Act odds. In fact, let's look at Polymarket's Clarity Act odds. We know we're about 50-50, and Polymarket's saying 46% chance of yes. Ooh, that's rough. We're right now sitting at 55% chance of yes. Patriot 23 says, das ist gut. Stationed aus Deutschland as an Amerikaner soldier, but good Bill, cold women, yeah. Yeah, the women in Deutschland are pretty good, yeah. I don't know about Brunhilde, but yo, some of them blondes. Imagine if you invested in Trump, Melania, and World Liberty Financial coins. Wowza, yeah. World Liberty Financial getting pounded in the backside. Nickel Trickin says, what up, what up? What's the news? The news is Jerome Powell paused and expectations for the Clarity Act are going way down. Inflation is up. Oil is up, causing global prices of energy to what? Go up. This is not a good time, everyone. Minidog says, I thought stablecoins were covered in the Genius Act. They were in terms of like regulatory, but not how to use them. And that's very, very common, right? Think, when they started regulating the internet, you had subsequent laws come out later that regulated different portions of the evolving internet. A lot of banks were sitting here thinking, okay, stable coins, whatever, this isn't going to affect us. But then stablecoin yield, commercial deposit flight risk, well, now they're like, well, wait a minute. We don't want to lose our money. Mr. Fantastic says, we just wasted damn near a year for when the House passed Clarity Act. Yeah, House passed Clarity Act in July of 2025. For you gringos, it's 2025. Senoritas y senoras, buenos tardes. So yeah, we wasted a whole year. Whole year of the Senate having this and doing absolutely nothing with it. So earlier, when Tillis was like, look, I have some ethics concerns with the bill, I have zero problems with Tillis saying that. I have a problem with you saying it at the last minute. Because I want you to think about a rocket. A rocket's getting ready to launch, and you're about to hit the launch button. And all of a sudden, before you hit the launch button, one of the scientists says, yeah, this is Dr. Hoffenheimer. You can't hit this launch button. We are going to explode if we do that, yeah? I've done some math, I've done some numbers. We need to fix this. And then Mission Control is like, everyone, hold off on launch, abort launch. Dr. Hoffenheimer has something we need to hear. And so all of a sudden, all these researchers looking and they're like, holy shit, Dr. Hoffenheimer is right. But then NASA Mission Control goes, Dr. Hoffenheimer, how long have you known about this problem? And he's like, 9, 10 months, yeah, it's been a little bit of time, yeah. And they're like, Dr. Hoffenheimer, why did you wait to the last minute to do this? If you had this concern 9-10 months ago, remember Senator Tillis has had the text of the Clarity Act, then why didn't you bring up your concerns earlier? Yeah, because I'm a douchebag, yeah. There you go, German accent, dang, right there. Exactly, why is it being brought up now? It should have been brought up when? It should have been brought up earlier. And that is what the deal is. So, got to be honest with everyone here. It's not looking so hot. Bringing up these concerns at the last minute is dirty pool. Are they concerns? Hell yeah, they are. Hell yeah, they're very dirty concerns. But the reality is what? The reality is that they're waiting to the last minute and they're playing dirty pool, trying to run out the clock. Minute Dog says that was funny AF. Speaking of funny AF, guess what? There's a guy I know. His name is Klaus. And on Friday night, I'm making my comedy debut at Alchemy Theater in Greenville, South Carolina at 7 p.m. That's right. Did the improv class, and now I'm doing a little bit of improvisational work with my Nuevo classmates. Well, we've practiced together like we've had class for the last 6 weeks. So we're going to be performing this Friday, 7 p.m. Eastern Time, Alchemy Comedy Theater in Greenville. You get to see my first ever, on stage improv. There you go. Trick says, I shall say it again. This is a decade that will remember for a long time. It will go down in history as the books been the time the world went freaking mad. Dude, because things are mad. Supply shocks have lasted for years with the Rona. We had building costs going up. There's no such thing as affordable housing anymore. Energy costs are insane. The price of land is crazy. Everything is driving a super high premium right now. And everything is going to be driving an even higher premium because of this huge jump in inflation and the continued jumps in inflation that we're getting. Minidog says, nice, you recording? I think I might have my wife or one of my kids, maybe do shorts or something like that. Or they might, just maybe record segments on their cell phone. Because they're not telling us what segments we're doing. Part of us getting thrown into the theater thing says that you just have to deal with it, with how stuff comes to you. So I'm sure I'll get some videos. I'm sure I'll get some videos put up. I'll figure it out. I'll have someone help out with that. So yeah, there you go. Inflation up, oil up, Strait of Hormuz is up. Silver $72. That's not bad. Low Life Gaming says, stand up. I get to say I knew Klaus way before he did comedy. Exactly. I've always wanted to do this. I like storytelling. And I'm not an improv fan. I like writing comedy. I'm not a performer, but I'm going to do it. I'm going to do it. Trick says we want the full show. I'll see if we can do it. I'll see what we can record. Yamaha says, did you hear that one is leaving OPEC? Yeah, and OPEC Plus. Yeah, I did. UAE, I think it was leaving OPEC Plus. Look, oil, this whole situation with oil is going to be something that we deal with this year. This is going to be a year where if these tensions stay up, we could run into $120 oil. Yeah, United Arab Emirates. Thank you, Yamaha. By the way, my most favorite Yamaha is an R6. Blue and white R6, early 2000s. Looked amazing. That was the favorite color scheme that they did of that. Philip Ryan, a little bit of Irish luck in the house. What's up, Philip Ryan? How are you doing? They said a lot of viewers and listeners from across the pond. Now, some of your things like Hoodstock are going to keep getting pounded, though. Gemini, it's going to keep getting pounded as long as volume is down. Because that's what it comes down to, right? Well, how do crypto companies make money? Trading volume. That's their biggest income. So if that's down a lot, that's why a lot of these companies are down a lot. Trick says, I think you should do a live for all your fans. That'd be kind of cool, too. They will not let me live stream it because it's a private company that I'm doing this for, but people are allowed to take clips of the show. I did check on that. Yeah, I'll totally get people to take videos. Fox6537 says hello from Finland. Well, hello back to you from across the pond. We've got some red up on the screen. Sailor back in the red as well, as BTC is at 75,190. This is going to be a very interesting time. Very interesting time. XRP and our favorites. The optimism seemed to be way back here in July. We might have to wait for the next governmental election rotation to get regs. That would be nuts. Black Axe Trader said, I had the first Gixxer 750 SRAD in South Carolina, bought in 1996. The SRAD, another favorite of mine. Well done. Well done. Dave Miley says, hello from Manchester. See, I told you from fans across the pond. Moshab is hanging out with us as well. OPEC was part of the old world. New alliances are being made. Yeah, I'm curious how this whole new energy thing is going to kind of shake itself out. I mean, obviously, risk assets have been in the dumper for a while. I mean, we're still better than where we were during the Gensler era, but that's not saying much. Justin a Truck hanging out with us now. Entry supporter. In 14 minutes, Jerome Powell and the Fed will be going live. This is your time to what? Well, this is your time to get your questions and comments in. See, a lot of peeps from across the pond in here. Oh, we got Buford in the house. Low Life Gaming here. What's up, Low Life Gaming? Buford's nice. I got to admit it. The only thing I cannot stand, though, about Buford, and I got to be honest with you, I was a total boat guy. I had our boat, our family boat was down there. I hated the sand gnats, man. They loved me. They would bite the ever-living shit out of me. If I ever worked up a sweat, I would get destroyed. Withouters says, hello from Amsterdam. Is there any advantage for Ripple having more clarity than others? Ripple doesn't have more clarity than others. If Ripple had more clarity and XRP had more clarity, why is the price going down with the rest of the market? Right? It doesn't. That's what you like. Clarity comes from the Clarity Act, not what Torres said. Torres is not the law of the land. She is a judge. You need laws. I bought it so it dips more for y'all. Well, thanks, Black Gold 84. Yeah, I think I'm going to be buying here probably in the next few days. Just small chunks. That's all I've been doing here recently, just small chunks next few days. I want to see what happens with today's meeting. Obviously, if there's a big red dipperoni, I'm going to go for it. Clarity Act, I mean, if they could keep the door open, that's cool, but is it dangling the carrot? I mean, a lot of people are thinking we don't have the time to get it done, so we'll see soon enough. Miss Carmen says still getting screwed. I mean, yeah, I know it sucks. Fox 6537 says bought XP at 40 cents, sold on $3, gonna buy it again at $1. Some people are playing the pumperonis and the dumperonis correctly. I don't know what the PACE Act or whatever it is, but I hope they get that pack. There's the Save America Act, which Trump said he's not signing anything until Save America Act gets passed. And there ain't no way in hell that that's passing. No CMs, they're a big problem. They are a huge problem. They are horrible down there in Buford. XRP doesn't need clarity. Oh, God. No, it's not true. It's not true. XRP doesn't have clarity. If XRP had clarity, why is it performing so badly? If XRP has clarity, why is it that it pumped on the optimism of Crypto Regs Week back here in July, but since, as Regs hopes have diminished, so has the price? If it had clarity, it wouldn't be based upon clarity pricing, would it? No, it wouldn't. You are wrong. Jackie Thomas, next caller, please. Getting better at that, huh? Gold selling hard. Where's the money going? It's easy where the money is going. Survey says, let's go to the stock heat map. Energy is soaking up the money right now. Energy and some chip plays are soaking up the money. I listened to Jake Claver, the guy with the inside. Well done. Well done, Dane SEO. I think we might have to get Mr. Garrison out every once in a while. Might be one of those times. Black Gold 84 says banks and institutions don't care what a judge says. They want laws, period. Exactly. Real business, real money wants acts of Congress. Acts of Congress are the biggest thing out there. What a judge says doesn't hold much water. When there's no regs and that judge is interpreting rules from 1933 and 1934. Fake Claver, like it. Brad Garling's House Mansion says Tillis wears his suit first and then goes to the shower. Yeah. Powell paused. He's coming on the mic here pretty soon. Someone said Tillis wears flip-flops only. I mean, it could be true. Tillis up in the state of North Carolina. He's done. He's one of the seats that are going to be open this election season. How about you bring Claver on your... Claver's a fucking tool. My God. Blow me where the Pampers is. $100 by Friday. No. So here we are, waiting for oil, waiting for inflation to come down, and it's going to take some time. And we're waiting for Jerome Powell to do his last hopeful FOMC meeting. Low Life Gaming says they're stalling it, but it can't stop it. Typical tactics. Yeah, the thing is, though, is we're running out of time here because people like Tillis are not running for re-election. So the people that are looking to get elected and the people that are sitting in now, they don't really want to rock the boat. They don't want to do anything that costs views. Red Rummy says, how do we have a lame duck Congress when Republicans have both majority? Because in the Senate, you need 60 votes for stuff like that to pass. And right now, they have a simple majority in the Senate, which is good for subcommittee things, but not a big majority of 60 votes to pass stuff through. That's why. Someone said $100 XP by Friday. No. 56 grams of gold today, 14 on the G. Dang, someone bought on the dip. That's like, see, and that's the best part. Those are physical assets. We love those. Well done, Trick. We're cooked for the next few months till like end of November. That's from AP 1300. Yeah, I mean, it sucks, dude. No, $1,000 in 5 minutes. I'm with you. It's the hopium. The hopium and the hopium pumpers have created so much damage to this market. So much unrealistic expectation. When does re-election season start? Re-election season's already starting. I have mine in May. I think first or second week in May. South Carolina peeps help me out here. So you're already starting to see the election season start. And that's for primary related stuff. You're starting to see them vote. So, like, that's where you get to pick between the Republican card who you want to run or the Democratic card who you want to run, not between the two. Chameleon says, I'm sure we can get the Clarity Act through once Pocahontas becomes head of the Senate Banking Committee. She likes crypto. Yeah, Pocahontas. Deaton couldn't beat her. Phase 1 says, who thinks Senator Tillis is getting a severance package from the banks? He's totally getting paid from the banks. The bank committee that shut him up the most was the North Carolina Bankers Association. That's the state that he's in. They came in hard. As soon as they came in hard, they stopped him. Christian Anderson said, Klaus, if you had the opportunity to be a senator, would you deal with the BS and take the position? If I had the opportunity, I think I would do it. I just don't think I'll ever get that chance. I don't know. I mean, like, I like politics, but nothing's getting done. Governor might be a better job. I think as a governor, you could get more shit done. Justin a Truck dropping support on the channel. Thank you very much, kind sir. I appreciate that. Trick says UK elections are next week. Oh, okay. I did not know that. Thank you for the share, Trick. What else do we got? 6 more minutes until Jerome Powell in his last FOMC meeting. Are y'all excited to see Powell go? Be honest with me here. Are you excited to see Powell go? Blue Nose or NS dropping support on the channel as well. Canadian. Hello there, my friend. I'm typing this as I talk. From the north. Thank you. Bam, Canadian friends. I need to get back up to Rainy Lake and do some fishing. For real, I need to do some Canadian fishing. I've never had any better fishing in my life than Canada. I've gone up to like Ellie, Minnesota, Eli, whatever the hell you want to call it. I've done Lake of the Woods. Rainy Lake, Rainy River was just awesome. And I'm sure there's probably even better the further north I go. Low Life Gaming says got into silver at $14. Waiting on clarity is doable. Well done. A lot of you are saying yes, it's time for Jerome Powell to leave. I agree, it is time. He was behind the ball every time. He was always late to the party. Late to the party, Powell. So, what else do we have? We've got crypto in the red. Volume, not the juiciest right now, which kind of sucks. 133 billion. Yes, but he won't be at the head of the board, swaying the way the ship goes. We all know that Powell had a huge influence on the direction of the Fed. So yes, shananana, hey, 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 goodbye. You can still have a voice, but it's not your direction. You were not Al Capi 10. Let's see. Lying Specialist says, yo, Klaus, I'm 19, been watching for over a year now, enjoy your content. I had a question. What do you think I should do? I'm down a little over 50% of holdings. Just want to see if it goes down. A lot of us are expecting it to go down further if clarity doesn't pass. If clarity passes, things could rebound like sharply. But what you have to ask yourself is, do you really think the Republicans are going to get 7 votes from the Democrats to pass clarity? Trump is heavy into crypto. The Democrats do not like that. They don't want him or his family to make any more money with crypto. They know clarity regs will make him and his family a ton of money in crypto. FOMC says, fucked on most crypto meeting is always a bust. Well done, Brotico Mining. Justin, a truck dropping more support too. Thank you, kind sir. Appreciate it. Octavio's hanging out with us. Says, yo, Klaus, what's up? Excited to see Powell go. Yes. Not sure we'll see a positive difference anytime soon. It's a little late, unfortunately. Okay. The whole thing with Powell is this. Powell can't do anything about oil prices going up. Warsh can't do anything about oil prices going up. But what Powell could have done was Powell could not have waited to the last second to raise rates 75, 75, 75. He did that because he was so far behind. Think about it. He shocked the economy, the global economy, with 3 75 interest rate hikes in a row. That is late to the party. That's 2 1/4 increase, 225 basis points over a short amount of time. That is crap. The market would have been much better off had we what? Had we gotten maybe a 50-point hit. Maybe a 25-point early when we saw some signs creeping in. Maybe another 25 early on when the signs were creeping in. But not waiting. Powell definitely overcooked the turkey. Chameleon 420 is exactly right. He waited too long to react, and by the time he did, guess what? It was already done. What Powell did was Powell realized he left the turkey in the oven so long, and he started basting it. And guess what, dude? You already overcooked it. Basting it is not going to undercook it. Justin a truck dropping more support says, and wait for it. He's waiting for it. We're all waiting for Jerome Powell. Crypto Case is rolling in late. Yo, Klaus and friends, what's up? What's up to you? Tillis is a word used to describe a person who does things backwards. Yeah, Tillis is pissed, man. Tillis is very, very pissed. Him and Trump didn't really get along. I think we can understand that. Jerome Powell, FOMC last meeting live in 1 minute. I'm very anxious to see how Powell is going to be as the last head here. His last meeting is head. Not good. Let me get a quick drink here and we'll see whenever he goes live. I'll bring it to you up on the screen. A little bit of electrolyte mix here. I got to ride in right before I did this, so there you go. Seven Sin says, Klaus, then why wasn't the enough to get rid of him? He failed at his job. Because to get rid of a Fed head, that is a very hard thing to do. The Fed's a private organization. Trump cannot get rid of the Fed head. Uh-oh, look who it is. Look who it is. It's going to be Jerome, always late to the party, Powell. Oh, man, here we go. Anytime now, he will come into the room, and we will all be excited. Last meeting, by the way, for Jerome. Just putting it out there. Celtic Salt is the original and best electrolyte. Dude, I love me electrolytes, man. Love me some. Dynamods has just loaded the clip on the exchange ready to fire. Nice. Nice. Exchange is getting beaten up today. That might be a deal out there. Jerome Powell, waiting for him. We're all just kind of sitting here. Come on, buddy. Open the door. What do you think he's doing back there? You think he's like screwing around? You think he's like Homelander and just doing a little quickie behind the old door? Little self-serve session? Another dump incoming. That's from Black Gold. Will silver drop? I don't know. Silver is a market that, honestly, I way the F out there. I mean, seriously, silver, I'm awesome. Happy with it zoomed out. I'd like to see it make another move, though. But what's going to cause it to be another move? Safe Haven is kind of losing steam right now compared to the oil play, the energy stuff. We know how that's going. Yes, he's late. Always late to the party. He's snorting. Well done. Well done. Time for some Persian pie. Oh, there he is. Trick's got Persian pie, and I've got this guy. Ooh, that rhymed. Well done, Klaus.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the Fomc decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over, with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the Fomc as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries, it is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have, I think, left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert, and monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate, and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut, that number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? You know, we have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because, you know, what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, you know, it's a much closer thing on the committee than it was in March, and you know, that makes all the sense in the world, it seems to me.
Claire.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. You know, well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. You know, at a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools? So
I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil Irwin with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. You know, the last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market, and should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many, many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out. And it was a very healthy sort of set of societal dynamics. So, of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world. It had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates. And for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
And just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the right decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you don't want to make them in a way that will be sustained and continue to make sense, and not something you need to take back, fairly quickly. So I think we just a group of us, including me, didn't feel like we needed to be in a hurry on that. That markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got three dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the Fomc, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Howard.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do, the shadow chair thing. I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know it, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus, and I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, they're real, and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral, or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable, because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know till we know. So fortunately, we're in a good place to wait and let things develop.
Thank you.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting, as opposed to the ones with SEPs. Can you talk about why you see that as a net positive?
So we always said, when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting, and sometimes between meetings, and doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to I try to deliver a message on behalf of the committee, rather than 18 other people going out and delivering their message, and it's going to be all over the place, because we do, thankfully, have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented any action on those changes?
So I'm not going to go into the real small specifics, but what we found very quickly was that making really large changes, for example, to the dot plot or the SEP, we couldn't come up with anything that had really broad support on the committee. And so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something, like I said, I think every new chair is going to look at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast. And that's because we have a 19-person committee, and you try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now. So it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s, the effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. The effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. And those hikes may continue to happen. And other things are going to start to reflect airline fares, I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it between 3% and 4%. We're a little north of 3.5%. So that's well in the range of what I would consider a reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen 4 dissents now since October of 1992, are you handing off a divided Fed?
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good, and we're in an unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every every supply shock has the capability of driving inflation up and unemployment up. And what do? The central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those two goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. People are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. And I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not, the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
And the message it sends to President Trump by staying on?
I'll stand on what I said earlier.
Victoria. Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law. But it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks that would be good to repurpose those to serve other purposes, but that's dragging us into politics and into fiscal policy. So we've resisted that.
Well, and maybe another way of asking it, too, is do you think that Fed independence is as strong now as when you became chair? And if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about, and we've had to do that, and we've been successful so far. But that's not over. None of that is concluded yet, and it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it, and I'd like to think that I'd like to think we can get out of that era and go back to respecting, what the law says and what custom has been, which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about? So
I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all I'll say. And and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris Waller is particularly passionate about that. Of course, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing he touched on was the idea of removing reserve bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine. Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say that that's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them really since the COVID reopening?
We're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening, which keep driving up costs, and the best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that, but we try to get there over time in a way that does the least damage possible, and our commitment to that is never-ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of a momentum in the economy, is actually higher than that. So that's a positive thing. If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's in a sense, the labor market is in balance. But it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good. Inflation is the thing we need to work on, and it's partly tariffs, which we think that inflation should subside over the course of this year, because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly. And we'll just have to see how that works out. In the meantime, we think our policy stance is in a good place for us to hold and wait developments.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement. And you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that, the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think, there's a lot of signaling going on when you change guidance like that. And so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it. And of course, we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But there was a difference over whether to do it at this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And you just said moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, a high-profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. You've made many tough decisions in your time at the Fed, and as your time as chair comes to a close and you think about your tenure and perhaps your legacy, are there any decisions that stand out as ones that you're particularly proud of? And are there any that, with the benefit of hindsight, you would take a mulligan on?
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, all of us together have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. it's been very challenging because we've been in a situation of supply shocks really for 6 years. And that's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management. And, and there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging, and we've tried to do our very best through these really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after literally centuries of experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic inflation everywhere in the world, and now we have inflation that had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the tariff shock as well. So, but what I would say to the general public is that's the backstory, is that don't think about an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore political considerations, completely ignore them. This isn't bipartisan, this is nonpartisan. So we want to just work directly for the American people doing these things. We don't think, oh, I want to do this because the president says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case. It's people do get it, that this is our commitment and that we will achieve it, and it's priced in. If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
Okay, we'll go to Richard for the last one.
Thank you, Chair Powell. Richard Escobedo with CBS News. We talked a lot about gasoline prices and even you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't see it in spending yet. You really don't. I mean, as one of your colleagues said, the economy has been resilient. It really has. Not just this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock, and consumers are still spending, and that's what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently. People are still spending, and how long can that go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now we don't actually see much slowdown yet, and certainly none from this. But you think logically you will, because people have a certain amount of money to spend. If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models that we use to calculate inflation. So they're just parts. You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices and that kind of thing. So it's there. The effects are not that big yet. We're a huge economy. The import sector is only 10% of the economy, so we're not like a European country where 50% of the external of the GDP is in the external sector. We're also, as I mentioned, we're an oil exporter, so we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone. I won't see you next time.
That's it. Powell is Dunskies, everyone. It is over. He'll hang out as long as he needs to make sure there's independence at the Fed, but his term as Fed head is done. Yeah, we knew he was going to pause. The scary thing is, though, is if you look at the rates for the end of the year, the expectation, 87% chance that we're going to get 0 cuts this entire year, with about a 10% chance that we're going to get an increase in rates this year. Holy crap. So the markets are pricing in that inflation is going to rear its ugly head and stick around for quite a bit in 2026. Oil is doing that right now. Oil is sitting at $107.14. Oil is crazy. It's definitely making the prices of gasoline, airfare, travel going up. A lot of people are feeling the pain on that. Tillis said, hey, I'm going to get out of the way to let clarity markup happen, but is it too late? Well, that's the deal. Chameleon says, thanks for the live, Klaus. Gotta bounce. I appreciate all of you for watching the live stream. Now, I posted a video before I went live. I appreciate if y'all would check it out. Go into depth about what's happening with the Clarity Act. That's right. We had some big developments. A certain Tom Tillis is saying, yo, let's do it. Shared that. So, what's everyone's thoughts? That was it. That was the last meeting with Senator Powell as the Fed head. What does everyone think about it? I can tell you what the market thinks about it. The market thinks this is absolute balls. Trick says later, Klaus. Later to you, Trick, and thank you very much for your support. Yeah, what's everyone's thoughts on Jerome Powell and the Fed? I don't know. Crypto markets are telling us balls. Oil markets are telling us they're paying attention in the Middle East. And stock markets are telling us all of the above. With some of the chip makers pretty deep in the green today. And Visa and MasterCard, the payment spheres, in the green as well. Crypto Mercenary says it's about as much as to be expected. Yeah, today was pretty much as expected how it was. He was a little bit lighter in tone, which was nice to see. It was good to kind of see him as a human. I kind of like that. I mean, this dude has been run through the mud too. He didn't get paid. He didn't get paid that much either. Like, the Fed head does not get paid as much as y'all think. Broderick Gold Mining says, seemed pretty legit. Tip the hat. Passed the torch with more grace than expected. He did do a good job of passing the torch. Jim Rocks says, hopefully crypto will take over this up market. I don't know about that. When inflation is high, crypto does not do good. Plain and simple. But here's what we're going to do. We're going to end the stream at 3:30 p.m. Eastern Time. So get your last second questions, comments in right now. Because Jerome Powell is out, they decided to pause. Gas prices are up, travel prices are up. And the Fed's, well, an independent entity. They're also independent from getting stuff done. No, I'm just kidding. No, the Fed just doesn't have that many tools. That's the light of it and the truth of it. The Fed can really work with a pretty big hammer, right? And that pretty big hammer smashes all markets. Trial by Fire says, appreciate you, boss. I appreciate you. I appreciate y'all listening and watching. Whitey in Vermont says, it's a great time to buy more Flare tokens in H-Bar. Flare almost at its lowest price. Thanks for your live stream cost. Thank you. When Lambo ain't anytime soon. He was bought by someone so he wouldn't have to rate cut. No, everyone knew he wasn't going to rate cut. Inflation's too high. I need some iced guade. Oh, dude, I need some iced guade. My iced Mick Cafe that was freaking late. It's going to be here tomorrow. I got the notification this morning that it was going to be delivered today. Got all excited. I ordered hazelnut. It's been hard to find around here. So what do? I order it, and now it's going to come tomorrow. What a shit show. Silly Sam, dropping support on the channel, says, thanks, Klaus. I got to get back to work. Laters. Well, thank you, Silly Sam. I agree. She appreciate the support from South Africa. Nice. With his Carbon Rudbach. So I'm trying to work on my South African accent. The only phrase I know how to say is Carbon Rudbach. J0687 says, I'm late, Klaus. Did they pause or hike? They paused. Brodeck Gold Mining says, coffee, please. Yes, I definitely could use some iced coffee at the moment. I still got a lot to do today. Business for usual for now. It is business as usual. Basically, the crypto market is going to get tugged by what two things? Inflation and Clarity Act. That is exactly how it's going to go. Brodeck Gold Mining says, if you didn't watch the market, you expected a cut? What? Yeah, you weren't watching the market. It's true. Thanks a lot. Enjoy traveling. Everyone, you enjoy and have a great time. I'm going to play some news. Say hello to each other on the way out if you don't mind. Or say goodbye to each other on the way out if you don't mind. Chillin' what? Like a villain.
My appetite, don't leave me here high and dry. Oh, well, I don't wanna jinx it, baby, and twist myself at the spine. Don't wanna overthink it, baby, it's just twist your body and mine. Baby, you give me ice and fire. You're giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, but I don't wanna jinx it, baby. Not get ahead of my time. Oh, but I don't wanna miss you, baby.